All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, October 29th. 2 days to Halloween, 1 day to FOMC. All right, so everything that we're talking about is for information purposes only, not giving out any advice or recommendations. So let's get into today's price action. Then we'll talk about some of the big movers today, and then we will go through some of the earnings after hours. How about that? So S&P, here we are again, opening here, trying to rally. Giving back some gains on a headline. Headline was false. Came back. But basically, we finished unched. So again, really depending on how you're trading. I've been talking about this concept a lot, so I won't spend too much time here again. But just have to be really careful with this market. Even though we are breaking out to new 52-week highs, you still have to be careful about where you're buying. If you bought somewhere up here, you may have ended up down. And again, this is just the S&P. It's not every stock, but just generalizing here a little bit. Depending on where you bought, if you bought kind of around this 10:30, 10, 11 o'clock, you may have ended up down on that purchase. Again, depending on what you bought. So again, have to really be strategic and thinking about how you're adding risk. Of course, tomorrow's FOMC, so I don't see a big advantage or a lot of edge adding into that day. Now that we have a day ahead, who knows? Maybe you could see some type of price action in the morning. Just because the market always seems to do the opposite of what you think it's going to do. But we'll see. I talked about that yesterday. How I'm actually surprised. I was looking at every Fed meeting so far in 2019, and the VIX has actually gone up after the meeting, not so much pre. Normally, that's the opposite. Normally, the VIX rises into an event, and then once the event becomes known, the VIX comes in. So we'll see how that works for tomorrow. I think I went over this yesterday. I'll just kind of throw this in there. But there's a 94% chance that we see a cut tomorrow. And then we'll see what we get. I think personally that we don't need another interest rate cut, but that's just my perception. I think they'll probably want to be and wait and see. I'm hoping that that's what they say, and I wouldn't think that the market, if you get that outcome where they cut 25 basis points and say that they're kind of done for now, I hope there isn't a negative reaction to that. I don't think that there should be. I think that we've got some room, and they probably want to leave a few bullets, in case that something worse happens. But I think them doing what they're doing should be good enough. I don't know if or why the market would be expecting more than that. So we'll see. That's tomorrow. That's my take anyway. I always will give you my opinion. So let's go to the performers of the day. Some interesting ones, right? Oil and gas. Nat gas, we talked about this in the midday video. If you're not a member, please check us out, TribecaTradeGroup.com. It's only $129 a month. We give a lot of information. Nat gas did give back some gains here at the end of the day, but I did put on a trade. I'll tell you what I used. I used FCG. That is the Nat Gas ETF. There's companies in this ETF. It's not the underlying commodities, but I think I don't trade a lot of energy companies because they're in downtrends, and I'm mostly a trend trader. But every once in a while, I'll take a shot on something. If being that Nat Gas sometimes when it does get going, it can get pretty whippy. We've seen that before, so I do want to have some exposure. So I put down a small trade. Oh, sorry, here's the members. These names like Range Resources, Cabot Oil and Gas, Murphy Oil, Cimarex. Those are the names that have. Devon Energy is another one that has a lot of nat gas exposure. So that is my thought. These names didn't do that much today, even though we did see a lot of call action and some individual names. Again, it's a lot of with the call activity. It's a lot of momentum stuff. I try to communicate as that much as possible. Like it's basically something is moving and somebody goes and buys it. It's not really smart. I think for a lot of that call buying that you see on the tape, even though it's different, like you may not have seen a lot of call buying and energy before or recently. We have actually saw some last week, but usually, like my take is that you want to be, I usually like to sell into the call buying. Because sometimes they're pumping it, right? And everybody's talking about it on Twitter, pumps it up, and then once that happens, then it reverts back. Again, that's what I call refer to as momentum call buying. Now, sometimes if the momentum can continue for a couple days, then it works. But I think more often than not, it's that 1 or 2 day momentum, and then it kind of reverts back. Especially the names that are in downtrends, right? They usually revert back to the downtrend after they get pumped. All right, so that's that. S&P, we are there's not really much to overanalyze here. Even though we were flat on the day, we're still moving in the right direction. We were not overbought in the RSI. You can see I enlarged the RSI because we're not quite there yet. So we're still in an upward swing. We're still above all short-term moving averages. I would say, even though we have a Fed meeting tomorrow, I'm not personally, I'm not micromanaging or overmanaging. I'm sticking with the trend. We're above all short-term moving averages. I will play this for as long as it works. If price starts to dip back below some of these short-term moving averages, like the 5 and the 20 that I've got on my screen, then I take off risk. But I never want to fade these moves. I always want to go with them. All right, so other names that were performers. Besides this, the healthcare names, right? We've been talking about healthcare for a couple days. I made mention of this on the midday video, and it's a pretty wide array of healthcare names. Like we had a couple names like Pfizer report. We'll see if Pfizer can kind of hold that gap for now. Maybe it sees a move up to the 200-day moving average. J&J reported, not reported, but they had some news on it. But also, I don't know if you saw these managed care names. These were some of the I went through. I usually go through, chart studies, especially when either the World Series is on or Monday Night Football games, such as Pittsburgh and Miami, which is horrible. Great excuse to kind of bring out the laptop and go over some charts, which I do that a few nights a week. And I found a couple of the managed healthcare plays, and if you look at this, right, just make sure you can see that there's a VPOC taken out. So it did the normal, it moved, it really rallied on earnings, kind of stopped here at this virgin point of control, put in a little bit of digestion and back up. And you could see this, and it's not just UNH. As I went through the charts last night, and these were a couple watch list names that I had mentioned on private Twitter. So if I go to, so just so that I'm not making this stuff up if you're not a member of Tribeca Trade Group, but I had said this morning before the open. A couple of these I said I really like the chart. I said this at like around 9 o'clock this morning before we started the pre-market session, which is open, of course, to all members. And then PSCH is another what I really like in terms of more of like a non-option trade. This is the small cap, not small. Again, remember that some people seem to make or say that XBI is small cap biotech. It is not. It's equally weighted, right? So this is actually small cap healthcare, right? I'll say that again. If you're a lot of people refer to XBI as small caps in biotech. That's not correct. It's equal. It's equally weighted, meaning the large cap names get the same representation as the small cap names. So that's not small caps. Now there's definitely small caps in there, and they get the same weight as the bigger names. But this is small cap healthcare, strictly small cap. This looks really good to me. You could see that it's been after a monumental run. It fell pretty hard, and then it's kind of been basing for a while. And it's the first time since it's been basing that price is above all these moving averages. So I like this. Maybe it gets back to this upward trend again. Maybe it gets back up to 129, which I would settle for that as well. But I think that's a nice way to play small cap healthcare. Again, so that's one of the things that I've been really looking at. Johnson & Johnson, so pretty interesting. I mentioned this in the trading room. I mentioned this on Twitter as well. I don't think half the people know what the hell I'm talking about when I mention this stuff, but I'll try to break it down. So J&J was halted today because and if when a name is halted and news is pending, you don't really know what they're going to come out with, right? It could be good news, it could be bad news. If a name is a big weight in an ETF, the ETF will continue to trade and it will synthetically price the halted name is doing. So, for example, if they release good news and they're still leaving the name halted, you could actually trade the ETF. Now, again, if it's only like if the name is like a 5% weight, it's not going to move the ETF. But the larger the weight that it is in the ETF, the more that the positive or negative news is going to kind of move. So you could see, and I'm surprised XLV is not up more. It's maybe perhaps that it's only a 9% weight in the ETF. But I used to do this back in the day. And it's funny because Apple reports, I'll get to Apple in a second in today's price performance. But whenever you see a name halted, and if you can find that it's a very big weight in an ETF, you could actually trade the name synthetically. Again, the name has to be a decent weight. But I used to do this, back in my institutional trading days, trading. What would happen on earnings? What they used to do, they don't do this anymore, but they used to halt Apple all the time until they used to halt it right after they close, and then they would release the earnings, and then they would reopen Apple sometime later. Now, what would happen is the Qs would be all over the place because Apple used to be like a 15% weight. I think it got close at one point to a 20% weight in the Qs. So I used to have a spreadsheet up, and I would do like a calculation that would imply what the price of Apple was, even though it was halted in the after hours, because the Qs would be moving all over the place. So, for example, if Apple had really good earnings, the Qs would go up, and you would be able to back into what the price of Apple was, even though it was halted, right? So you can use those. That's why it's kind of some people refer to ETFs as derivatives because you can imply prices of the underlyings. Now, of course, you need everything else to kind of remain the same price, right? In NASDAQ, for example, there's 100 names or roughly 100 names in the Qs. If other names are reporting earnings, then it might be a little bit off, right? But anyway, I just thought I would throw that out there because I like to teach people things and teach people how to trade. Now, again, if J&J was like a 25% weight in XLV, it would be more impactful. All right, so let's talk about Apple for a minute. We'll go back to this performance just to kind of wrap this up, but you could see for the underperformance, silver was actually up today, rallied from the lows, still finished. Again, this column is percentage change from the open, but the Qs finished down on the day. And if you look at some of the bigger names in there, like Apple, it was down. The banks also did pretty well today too. They rallied from where they opened. So names that did not perform, or groups that did not perform well today, tech, basically tech, semis. I think some profit taking. So, I so Apple was down 2.3%. Why do you think it was down 2.3%? And I know you can't respond to me in this video, but it's funny because I saw I'm sorry, I'm just reading something. I saw people doing victory laps who were shorting Apple. I get it. That's good. That's fine for a trade, right? If you kind of put a shorted Apple on the open today. But you have to realize this thing has gone vertical. It got really overbought. People are taking profits into earnings. It's not people, in my opinion, right? I don't know for certain, but people are not shorting Apple here. The longs are taking profits. I mean, this is very logical. We saw this, for example, and I went through this in the midday video, so apologies for repeating. You can skip ahead. But the same thing happens with Taiwan Semiconductor, right? Taiwan Semiconductor had this major move into earnings. And then on earnings, what happened is people took some profits before they reported. Then, Taiwan Semiconductor had great earnings. And even though it had great earnings, it sold off a little bit. Why? Because it got way overbought. and then it took a few days, and now it's back because they did have stellar earnings. So think about that for Apple. Like I said earlier today, I'm not trading Apple for earnings because it's already realized a huge move. What else are you looking for to the upside? If you're playing this to the downside, I don't know what you're thinking, honestly. But the move is because people are taking profits ahead of the before that. Like, wouldn't you want to guarantee that you made something in Apple rather than play with a complete unknown? That's just how trading is done. If you're dealing with a huge profit on your hands, you don't throw the dice. You either with a huge gain, you lock in your profits or you hedge, one or the others, and that's why you probably will see some put buying in Apple, because people want to, if they don't want to sell, then they want to lock up some of their profits by buying some puts, right? So they're hedging the downside. All right, very very simple concept, but I sometimes I am literally shaking my head with what people are thinking on Twitter. Oh my God, they know something. It's going down. Seriously. Uh, um, so the other thing I wanted to mention is I think this chart is interesting. So I'll get into some names that reported after the close. I don't think a lot of them. There's a lot of them that don't seem to be moving very much. AMD, probably a good case of selling premium, right? You can do that. I don't know why I didn't look at it for AMD, but so when you sell premium, maybe selling a call spread, selling a put spread, you probably would have won pretty nice, made some nice money. Take a look at this chart. This is SMH versus Qs, right? A relationship. SMH is in the numerator, and the Qs are in the denominator. And notice that SMH has probably gotten to a point where semis have really outperformed the Qs. Probably people will start to take profits here, I would think, too, logically, right? This is a 2-year chart. We're kind of getting back to this resistance up here. We could kind of look at this a little bit further back, but the semis have really run versus the Qs. Probably time to lock up some profits in the semis at this point, or maybe not look so much in the semiconductor space for new longs, right? Again, all about risk to reward. Uh, you know, at this point, maybe look at some names in the Qs as longs versus semiconductor names. All right, just a thought there. What else did I want to go over for today? A couple other names that reported, EA was up. I think it's given back. Amgen seems to do this every single time. They announce like awesome numbers, and then the stock it pops and then sells off a bit. ENPH is a small cap solar name. I actually bought some of this. Their numbers seemed really good, so I don't really know why they're down when somebody reports. So again, different, right? Again, I'm doing a lot of teaching in this. I feel like I'm doing a lot of teaching in this video. But sometimes, like for example, Twitter, right? Twitter had horrible numbers. The stock goes down. Retail traders want to buy it. Why? Because they see it down. I don't really understand that concept. If a name for me, so the only time, so I don't buy that kind of stuff in the after hours. If somebody reports really good numbers and the stock falls, I may not be smart enough to figure it out why it's down here. Maybe the expectations were a little bit too high, but these are good numbers, right? So I'll buy the dip in something that had better numbers than what they're expecting. Fourth quarter adjusted revenue 200 to 210, estimate 193. That looks better to me. Gross margin looks fine. Third quarter adjusted revenue much higher than expected. Maybe the estimates weren't quite as high, but does that warrant a move down from 25 to 22? I bought some at what 21 and change. I bought some. But again, these are all good numbers. Do you see the difference? So if a name, and again, I'm just throwing it out there because I got a lot of questions on Twitter. But if they completely miss all their metrics, that's not a name that I want to buy the dip in, at least for a while. But if something has great numbers and the stock falls and it's a little bit of a head scratcher, yeah, I'll take a shot at that. If you look at the 1 hour. So again, big difference. I see retail traders sometimes just wanting to buy because it's down. I think that could be. So there's another VPOC down here at 20. But there was one taken out here, so that's kind of what I'm playing with. But so again, I always try to give a little bit of instruction or a little bit of help to what we're doing. Any other names? There was a bunch of other names that reported. I think a lot of them are non-movers. So I think we'll call it that. We'll go over tomorrow. We'll spend some time, maybe a little bit more than usual because it's FOMC day tomorrow. Again, I think if you're kind of, I think the main thing to do is to kind of reduce risk. Maybe to have a couple trades on that could really move. If they do say something, you could always look at gold, bonds. We didn't really talk about bonds today. They were up slightly, which again, after being down big yesterday, that's not much of a crawlback. Oh, this is the last thing I wanted to talk about. ETF volume, right? So we are seeing some interesting things. I don't know if this was about a $300 million block trade in the USMV trade. I don't know where the volume. Oh, here it is. But you could see, maybe somebody's actually selling. It could be that they're still buying. We have not seen any unwinding of this trade. But you could see these big block trades. That's 4 million shares, right? They've used a whole bunch of modifiers on them, so I don't know what they're doing. But I would imagine that they might be selling, something I'll watch in the next couple of days. We continue to see a lot of volume in. Let's see if I can bring this up. If you look at the volume movers for today, a lot of value, right? This is a value ETF, VLUE, traded 3.3 times normal volume. VTV traded 2.6 times normal volume. So more volume in value ETFs, and a couple still more in European ETFs. EFV is value in Europe. All right, guys, I'll leave it there. So again, I think something kind of interesting going on in, of course, international areas. EWA, which is Australia, also saw some good volume today. So more on that tomorrow. Have a great night, everybody. See you tomorrow.